Welcome everyone to this session on omni-channel customer engagement. How to become your customer's primary financial institution or PFI. My name is Zubair Ahmed and I welcome you all to this session. From an agenda perspective, we'll go through a brief introduction and then dive into the matter of PFI. What does it mean to be a primary financial institution for your clients? In the end, we'll wrap up and I'm more than happy to take your questions. Please do post your questions. I'll try to answer them all. So without further ado, a bit of introduction. I'm the Executive Vice President and General Manager of Middle East and Africa at VeriPark, covering a range of 50 plus customers that we have in the region. VeriPark has been in the business for over 2 decades, purely servicing FSI with verticalized banking products. Before that, I have a good 3 decades, nearly 3 decades span of experience in the banking industry. With this, let's dive into what is the primary financial institution? What does it mean to be? So the fact remains that there are thousands of financial institutions available at your fingertips. Consumers have more choice today than they have ever did before. Now, this presents an opportunity for a consumer to select the best bank for the best product and for the best region that they are in. So it's very geographically oriented as well. So deciding where to do your banking is not as simple as it once was. There are thousands of financial institutions available in a well-connected digital world. While brick and mortar are still important, branch and ATM access is only part of the overall equation. Banks are asking themselves not only how do we capture and hold on to our members, but also how we can nurture that relationship so that loyalty grows. How can we become our members' primary financial institution? Now, every consumer has, as far as the credit card product goes, a number of cards in their wallet. So what makes them select the one which is the most preferred is the question to be asked. Financial institutions face fierce competition for market share, and that competition will likely intensify as disruptive forces such as digital technology continue to change the landscape of the banking industry. And this happens every 3 to 4 years, and we've seen that in the last 2 decades. As much as 30% of banking revenues are at risk because of new trends and new competitors. Now, within 2020, we realized this, that kind of market share has been challenged. And obviously, 2020 has been special because of the new normal. So that might have expedited the inevitable change that was upon us. Financial institutions that want to increase profitability and improve retention must remain top of mind and become an invaluable daily resource if they want to become the primary financial institution for their account holders. And the key word there is daily resource. So how do you become a part of the lifestyle of a client, of a customer? So they don't come to a banking app or a banking venue or a banking online presence just to do banking, but they do life and banking happens almost indirectly. Now, rather than view disruptive forces as hindrance, financial institutions should embrace the changing landscape as an opportunity to increase services and value to customers. And some of those opportunist ideas we have already seen in the market. Now, this will increase customer acquisition and retention and will help build deeper customer relationships. FIs that are willing to do this can increase their operating income as much as 30%, we think. Their customer base up to 10% and possibly their customer interactions up by 250%. So this is what the opportunity that holds. Now, while that is true, more consumers want to leave the mega banks than ever. So a study done recently in August 2020 was about the new normal impact on intent to switch primary financial institution. So the findings are that today, more than ever, large multi-location banks are possibly in a threat where pre-COVID, the propensity to move from a mega bank was 13%, it has increased to 27%. And that has happened for multiple reasons, right? Because now, with the digital enforcement, so to speak, that the pandemic brought, a lot of other options have become available. The lifestyles of consumers have changed, where not only digital has happened in banking, but it has happened across, and hence their demands from a bank from a digital perspective has only increased. So it's not only digital being option or a good venue for millennials. It's a shift to digital completely. The entire base has shifted to digital first model from a consumer's ask perspective. Digital journeys are the new norm, and digital journeys which have a lot of manual intervention, a lot of back office human burden are exposed and are not desired. More online shopping and new consumption patterns is one of the keys of the human behavior changing. Huge opportunities exist to fast track that, right? Digital services take them to market, take them at the doorstep of your consumers pretty fast. Now, while that is happening within the consumer behavior, the customer demands are also changing. So now they value new tools that enable self-service. So it's all about self-service and not only one way to get to the bank, but possibly leave it to me multiple ways. Give me choice. And they're also open to non-traditional providers, providers who are disruptors to banking. They are not banks natively, but shifting towards a banking service. And the consumers are open for that. They want services adding value beyond banking. So how banks become part of the lifestyle of a consumer? Now more than ever, they are ready for computer-only advice on banking products. Thanks for machine learning, AI, the analytical modeling that has really gained momentum. So consumers are seeing that in their retail experiences, in their airline experiences, in their hotel hunting experiences, vacation hunting experiences. So why not in banking? And they don't no longer mind interacting with a computer model, whereas in the past there has been a lot of barriers to that. While this is true, they also would love to have an expert advice on their fingertips. So if they want to go deeper into a product, they would love to have a human engagement for which they don't have to wait for long. Would like to have innovative communication technologies like watch, like other wearables, seeking added value in their daily lives. Again, culmination of product coming into the lifestyle. So nobody goes to a bank to buy a product and then take that credit line and convert it into what their actual real need was, but actually goes about serving that need, and banking happens as a transaction within that. Also, the customer demands are on the branch going digital across. And also, one thing that remains the same pre-pandemic, post-pandemic, is the trustworthiness of a bank. Banks are still being seen as pivoted around the trust component, and that remains, and that needs to be exhibited in the digital world as well. So digital customers, in by that purview, are less loyal, right? Because they for the first time possibly, the customer really knows what they want, and they have options, and they do realize that as well, and they would like to shift if their needs are not met. And the shift is even easier now because of the pandemic, the lot of options that have emerged, a lot of digitalization that has been done. So shift is not that big a hassle that it used to be. And and as a virtue of all this put together, the digital customer has become less loyal entity for banks. Now, digital makes it easier to manage multiple providers from a single mobile screen. Now, this Gardner slide is a bit dated. This is 2018, where we used to look at a brick and mortar bank, and the thinking was a single mobile app or a single mobile screen having all the banking functionalities embedded within that. So a primary bank, a credit card provider, all could be separate apps on a single screen. But now, 2 or 3 years later, to this state, the needs are different. No longer the consumer is excited by having a one app for credit card management and another one for lifestyle discounting, a third one for budgeting and planning. They would like to have everything in one, right? And plus more than what bank offers, plus what their favorites are, and so forth. So the culmination of everything, a 360-degree kind of an app, which has everything. So that kind of gives birth to the concept that VeriPark and myself have been talking about a lot these days. Is about super apps. How super apps enable to become the PFI. So the super app concept is about a single device, a single mobile app becoming your onboarding device. It's also your payments device. It's also your budget and planning device, your savings device, your financing device, your protection device for any kind of protection like insurance, anything else that you desire. It is your investment device, regardless of your segment. It comes built in with that. And when you progress in your life and start investing money, that option is already there. And it's also lifestyle device, which is like an umbrella concept around the entire app. And let me take you through each one of these very briefly. The onboarding device, our view is quite different, right? So, how do you onboard a client to a bank, fresh, say in 5 steps, taking 4 minutes, 1, 2, 3, 4, 5, and you're done, and instant fulfillment, no manual intervention, already pre-planned, pre-approved elements built in within the rule engine, and an experience that basically makes use of the identity's existence before the identity touched the bank. So a lot of integration, a lot of pulling in the information and making onboarding possible. So document capture, performing OCR, face recognition, liveness detection, video capability, banking capability, and so forth. And more essentially, not a front-facing good onboarding experience that has another 20 people in the back office going through the next 48 hours stamping papers. A total end-to-end automated onboarding element. So this is what we mean by onboarding device. And then the payments device, where all kinds of payments, all kinds of inclusion within the payments. So you can pay your friends who are doesn't have to be the customers of the same bank and so forth. A complete payment solutions within the same super app. Moving forward into a budget planning device where you plan your goals, you decide what you want to spend your energies in, and you create interesting ways of savings, right? You shake a device and save. You roll open a card and save randomly. Introduce some gamification to that experience, and that saving element goes against the budgets and the goals that you have, and the motivation around those goals. And then the savings device. So how the saving products come into play, how you can open the savings, the multiple products, get into raffles around savings and so forth. Also, the super app having a financing device measure where your financing journey, your loan journey starts. Loan onboarding happens. Pre-approved loans are given to you. And that experience, how that goes through. And then the protection device, whereby the insurance needs, the credit shields for something that you have bought, and you only need a coverage for the next 24 hours or the next 48 hours, the travel insurance, the special needs insurance, and so forth. And banks here can make it very transparent to the consumer, right? So some of the insurance components might not be funded or created within the bank, but these could be the third-party providers. So a platform, market, if you will, of insurance can be exposed in this fashion. And then an investment device, a connectivity to the latest stock market uh, um, triggers as to what makes a good investment advisory, so to speak, what kind of exposure within the market and so forth, and within the different instruments that are available, such as bonds versus stocks and so forth. And then finally, a lifestyle where largely it's the personalization. So you are able to orient the entire super app based on who you are and what your likeliness is. And then everything that happens is context sensitive to you. So you're given an offer at a time when you need that offer for a thing that you love doing to start with. So the propensity for that offer making sense to you is extremely high. Discounts and coupons when life happens, not when the bank wants to send you the discounts and coupons. Intuitive goals, intuitive to your goals and needs. So a full understanding of your budgeting and planning device. So lifestyle basically happens across. It's an umbrella concept. Sharing memories and moments, splitting bills with friends. Those kind of functionalities come from lifestyle thinking. So in a nutshell, if you put all of this together, you have a super app. And it's one single app, and it's one single experience, and it grows with time, depending on how the client's relationship grows with the bank, from being just out of college to getting married to the second job, the first business started, and so forth. And the functionality gets enriched with time. So the super app concept has been used before as well. And the value proposition is about transforming from transaction-centric to customer-centric mindset. So going forward to a real-life example, Empara set out to be the digital and eco-friendly bank a few years ago. And they did well. And we had the opportunity to be with them. Empara is a digital-only branchless bank. No digital agents, no relationship managers, purely a mobile super app, which is the bank itself. Tremendous success so far, 1.25 million customers, served by just 260 plus employees. A cost to income ratio that other banks would die for. 77% net promoter score, extremely high, resulting in 50% customers coming through referrals. So there's hardly any marketing effort for that 50%. Just do what you promise and the customers come. And in case you want to reach out to a human on the other side for help, advisory, counsel, 30 seconds from the time you initiate a call to reach a customer representative. So that promise from the human perspective, from the servicing perspective for exceptional cases. And fully digital customer onboarding, something that I spoke about earlier in my presentation. A business challenge for Empara when they started was keeping up with the demands of millennials, creating rich and meaningful digital and mobile experience, implementing a fully digital customer client onboarding process. And what they did was they also converted their retail onboarding process with a lot of functionality enrichment to SME banking, which is quite difficult, right? To have an SME on board digitally in a few steps, in a few minutes. And simplifying 20 to 30 pages legal documents into nothing, right? So it's a really innovative example of a bank which has done well. 9 out of 10 customers are happy. Extremely high success rate, right? Built on VeriChannel, which is a omni-channel platform of VeriPark. So as a closing, the key takeaway, right? So the question is, and I'm really interested to listen to your advice and your concepts and your thinking right now, that is this a choice? Are we at a stage where we can afford to possibly choose and delay? Is there a cost of doing nothing right now? Or is this an absolute necessity? We need to think omni-channel. We need to think multiple levels of engagement coming through a single platform, which is cheaper to maintain, which has a single back office at the back. So you don't have multiple queuing system with every product that you buy. It's a single holistic story. And it's the one that serves the customers in the way that they want to be served. So with this, I would request you to please keep the channel open. If there are questions, comments, I would love to receive them. You can reach me at zubair.ahmed@veripark.com. And please let me know if you need any further information and what your views are that we can talk about in the coming future. I thank you very much for being here. Such a pleasure to share some of my thoughts with you. Thank you.